Hello, Jim here. I've been on a journey for the last couple of years to learn the right way to sell options and earn some really good extra income. Well, last month I actually moved my 401k into an IRA so that I could sell options on it and also earn some really good interest. Now, can I retire on this 220,000 that I moved? Well, I'm going to answer that question at the end of this video, so stay tuned to the very end. I'm going to go into detail on what I'm doing now, how I'm earning some really good income off of this one account. And then I'm also going to go into some detail about some of the trades I've done in this account. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and get started. First of all, I wanted to talk about why I decided to do this video. About 4 months ago, I was looking at my 401k and looking at its performance, and I decided to compare it to one of my other IRAs. It's the IRA with options, and I found the IRA with options did a lot better, so I decided to, at that point, to go ahead and move my 401k into an IRA, so just like my other one, I could also sell options in it. I also was concerned because Schwab has not paid very good interest on any of the funds I'm using for selling cash secured puts or vertical put credit spreads. They pay I think it's like 0.48%. And I had heard that Fidelity paid nearly 5%. I think it's like 4.99%. So I wanted to test that theory out and see if I really was able to earn much higher interest. And so that was the reasoning behind it. Since then, I'm literally in my second month of trading in this account, and I've done really well with it. And I did earn 4.99% interest on the cash balance that I had. Now, when I moved it, it was actually 217 was the amount of cash that I moved. And my goal with this new account was to earn around $2,400 a month, which is right around 1% on a monthly basis. So if you're able to do that and earn 12% and then potentially earn, 4.99% in interest, you can do really well just by earning that interest and, doing fairly safe option strategies. And so that's what I've done for October and into November. And the first month, I believe I did something like 3,600. It was 1.6 on a monthly basis or 1.6% on a monthly basis. And then this month, I'm probably going to do closer to 2,400, 2,500, a little bit less, partially because of, I took half of last week off and then the markets will be closed. It's actually the day before Thanksgiving and the markets will be closed tomorrow. I'll be driving and on vacation on Friday. So I'll have limited opportunity to trade. So my guess is I'll do between 2,400 and 2,500 a month. And I think long term, my goal is to have half the account invested and then use the other half for continuing to sell puts and to pick up good securities and earn, even better income like I have with my other accounts. So, and then in this account, since it started out with all cash, when I moved everything out of my 401k, everything got moved over to cash. I'm doing the wheel primarily. And if you're not familiar with the wheel, it's simply you're selling what's called a put. So someone would, pay you to sell you stock. So I'm selling a put, picking up premium. Hopefully it gets assigned. If it doesn't, then I just sell another put. If it does, then I own those shares and I can sell what's called a covered call, because since I own those shares, someone will pay me for the opportunity to buy those shares from me. And again, with the wheel, I take a little bit more risk than I do with my vertical put credit spreads in my other, well-vested accounts or my accounts that are well invested, meaning I pretty much have lots of stock in them that I've owned for years. And so I don't have as much cash to play with. So the fact that I have a lot more cash in this account and that it's a retirement account, so I don't get hit tax-wise, I don't really need to worry about it. So running the wheel makes a lot of sense. And the first month I did that. I'm also trying to stick to no more than 90 days out. And so in October, I've gone ahead and I've already closed a good bit of those positions. And I've done quite well with it. So I'm just continuing again in October. I did have, I think, Corning get assigned to me. I didn't have anything else get assigned to me. So as more and more gets assigned to me, it'll become a little more difficult to continue to do quite as well in the account. Mainly because, once you're owning shares and your cash amount goes down, it's a little bit harder to make as many trades. But until it's fairly well funded or invested, I'm going to continue to run the wheel, and typically pick a delta that's higher than my typical delta. My typical delta for a put is 15, and for a call right around 20. I'm going closer to a 30, 35 delta for the put and the call, again, because I want to turn this account and really create a lot of cash in it. And then I'm also trying to be a lot more diligent on closing trades that are profitable. And that's what I did earlier this week. I think I closed 3 or 4 trades, and then actually 3 or 4 expired on November 17th. So in my other accounts, I haven't typically been real diligent on that, but this time I am going to do that, which is giving me the ability to, turn over the account more and earn even more cash. And that's what I've found so far. And the goal of this, again, the account was I think 217 when I brought it over. I believe it's right around 224, 225 with the cash I brought in. And I did get that 4.99% interest rate on the cash that's sitting there, even the cash that's directed towards the puts, the cash secured puts, or the vertical put credit spreads. Now you may ask, well, why am I doing vertical put credit spreads if I'm doing the wheel? Now, if I can purchase like a put that's, say, a $10 spread or $10 out. So if I sell a $40 put, but the $30 put is really cheap to buy, like $4 or $5, $10, something along those lines, I'll typically buy the put, just because I found it's a good practice to do. For that cheap, it's well worth buying. So that's the main reason why I don't just have cash secured puts. I also have vertical put credit spreads. But again, I've been able to generate quite a bit of cash with this account. So again, I believe it was $3,600 the first month. Probably going to do $2,400, $2,500. And I'm estimating that I can, with this $220,000 account, I can bring in right around $2,400, $2,500 on a monthly basis, which is quite good. And that doesn't even include the interest that I earn or any dividends I might bring in over time. And I'll show you in a spreadsheet how that impacts my retirement. So in this next part of the video, I'll go over that spreadsheet, and I will jump into the October planning sheet and show you some of the trades that I did. So stay tuned. Let's jump into the next part of the video. Okay, now I've opened up my planning and budgeting worksheet. Before I jump into it and explain what you're seeing, I do want to mention, please hit that like button, subscribe. If you're curious about my memberships, take a look in the description. Details will be there. I've had a lot of people joining. I've added a lot more content recently. I plan to add even more content, probably weekly. Live streams for the memberships is something I'm looking at, probably starting in January. So take a look. We do have a lot of really good discussions. So it may be very well worth your while to take a look. I do offer a 1-week free trial membership if you want to try it for a week just to see if it's worth it. I may turn that off at some point because, again, I have so much content and I've shared my trades for years that you can really, it's a lot of free stuff. But currently I'm continuing with the 1-week free. Like I said before, I may change that. I may remove that at some point. But let's go ahead and jump in. So on the left side of this spreadsheet, and this, I've just taken one I used in previous videos and I modded it. But these household expenses are pretty accurate. These are expenses that I've calculated in the past. And I need about $4,200 on a monthly basis. Now that's low because most of my house is paid for. I have a very low, all I have is a HELOC, and I think I'm only paying a couple hundred a month, if that. It may be like $150 to $200 a month. So my house is mostly paid for. If my house wasn't paid for, then it would probably be closer to $5,500 or something along those lines. So on the right side, I typically had a lot more data in there at one point, but now I've just minimized it to the 220 in this IRA account that I have and basing everything on it. So here, with the interest off the 220, it would be this amount, 65.86. The Fidelity premiums, this is from selling options. Again, the 2,400 on a monthly basis, I would bring in 28.8 on a yearly basis. And then here's what yearly I would make. Now, this is with my Social Security. You'll see the equation here up above, 2216. So on a monthly basis, I would, at full retirement age, I would bring in 2216 in Social Security. So this 61,978 is this 65.86, the 28.8, and then the 2216 on a monthly basis comes out to be 61,978, which is 5164, which more than covers my budget of 4201. Of course, this would probably be higher, but even if it was, I don't know, 10% higher, I'd still have plenty of cash to cover it. And, here you can see net 963. So just by selling options on a small account, and this doesn't even include dividends, I could probably add in another 2,000 to 3,000 in dividends and potentially even be more aggressive with the premiums that I can earn on a monthly basis. So you can see here, I could literally cover my retirement expenses just with this $220,000 account. And this doesn't consider my brokerages or any of the others. I wanted to show what it looked like with just 220. So in a sense, with 220 earning this 28.8 and the 65.86 in interest, you could, do well enough to pretty much cover your expenses. Now, for some of you, you may live in very expensive places like California or Florida, and you may be thinking, well, 61,000 is nowhere near enough. But again, this is just a hypothetical, the fact that you can potentially earn that amount of money. So let me show you my one of my other spreadsheets. Oops. Okay, this is for November. I also wanted to show you actually. Okay, this was for October. So I did 3,671.94, which is a monthly return of 1.69 and a yearly return of 2023. And these are all the different trades that I did. So I did AMD, I did Home Depot cash secured put. A lot of these have come back with the bounce we've had in the market. A lot of these have gone up considerably. So I did, all these different companies: EMN, Qualcomm, XLU. I did not do XLU. It's one of the ones I was looking at. So I kind of did a list of my favorites. Corning, this is the only one that has been assigned to me. And this was at the end of October. It was still open, but now that's been assigned to me. A lot of these have been closed. Pretty much anything 1117, like IJR expired. This is another ETF that I really like. CF Industries, another good company. It doesn't expire till 1/19/2024. Again, try not to go out beyond 90 days. So at that time, it wasn't beyond the 90 days. Then I did Polaris. I like Polaris. It's still in this range. So it hasn't been assigned to me yet. I didn't put the expiration there, but I believe it's 12/15. Zoom. Right now, it's pretty far out of the money, so I might be able to close it. I closed several of these that were fairly out of the money, but you can see Williams-Sonoma, MetLife. Actually, I ended up doing a MetLife trade in November. BKE, another great company that I really like. XLE, and you can see most of these are cash secured puts. Some are vertical put credit spreads. XLE was a vertical put credit spread. And again, buying the 65 put was pretty cheap. IWM, which is the Russell 2000, same thing with it. I did a vertical put credit spread. SCHD, I did the wheel. Again, most of these are the wheel anyway, cash secured put. I really like SCHD, and I plan to pretty much own it. And at first you'll see I kind of was going with the lower deltas, but I've towards the end of the month I definitely increased the deltas. I think some of my later trades had much higher deltas. And I've had pretty good returns. When I'm doing a cash secured put, of course, your returns are going to be lower. Like this is a cash secured put, but even some of my cash secured puts had some pretty good returns. So I'm not going to go into these in detail, but I share this with my membership. And I'm trying to repeat this. So a lot of these I'll be trying to close here shortly, the ones that I have not. But if we get another day or two of bounces, I should be able to close a lot of these. So this one, and then here's November. This is the one I've done for November. And I probably need to update this account value because it's closer to 224. And I know this is just too much to go over, but this would be higher, but I wanted to share one piece with you guys because, again, I made a mistake in a trade I did yesterday. I actually entered it incorrectly. I entered it backwards. So instead of creating a credit spread, I did a debit spread, and I had to back out that out today. So I ended up with a $60 loss for a trade. It was a vertical put credit spread on Cisco. I still really like Cisco at its current price, but it was up today. I may look to see maybe on Friday or early next week to see if I could run the trade again and pick up Cisco at this, in my mind, a very crazy low price. It's right around 47 or 48. So I didn't want to go into a whole lot of detail, but the fact that I'm pretty confident I can make this 2,400 monthly and probably a little bit better, through just improving the way I do these trades. And then I think just the nature of the wheel, you do a little bit better. So that's pretty much what I wanted to share. I didn't want to go into too much detail. As always, if you have specific comments, please add a comment below and I'll try to answer it. And again, if you want to take a look at my memberships, all these spreadsheets will be out there for my members. So thanks for joining me, and look forward to seeing you next week. And have a great Thanksgiving. Bye-bye.